Banks and other financial institutions. The banking system. Banks provide services just as regular business would. Some examples are checking and payment accounts, saving accounts, loans, and investments. There is much more risk of a bank failing than a normal business because thousands of people would be affected.
The Federal Reserve System. Federal Reserve System supervises and regulates member banks and helps banks serve the public efficiently. Individuals cannot open an account in the Federal Reserve because it is a bank for banks. All national banks are required to join the Federal Reserve, and state banks may join. These banks are known as member banks. The U.S. is divided into 12 Federal Reserve districts, each containing a Federal Reserve Bank.
Federal Reserve activities. The FED provides services such as holding of reserves. This is when banks cannot lend all of the money they receive from customers. Another activity would be clearing. This refers to the process of paying checks and other payments among different banks.
Banking and the economy. Here are some ways that individuals, businesses, and governments use banking services. Borrow money to build roads. Borrow money to buy seeds for crops. Deposit cash for business operations. Finance a college education. Invest for retirement. Obtain a mortgage. Process credit card transactions, and save for a vacation. Deposits do not remain idle in bank vaults when you and others deposit money in a bank. You are helping to create jobs and economic growth that benefit your community and society.
Types of financial institutions. Deposit institutions. Deposit institutions, also called depository intermediaries, accept deposits from people and businesses and use them to finance their business. Commercial banks, often called full-service banks because they offer a wide range of financial services. They offer checking accounts, provide savings accounts, make loans to individuals and to businesses, and offer other services. In larger banks, different departments may handle these services. There may be a loan department, trust department, a real estate department, and an investment department.
Savings and Loan Associations. Savings and Loan Associations, S&L, specialize in saving accounts and making loans for home mortgages.
Mutual savings banks. A mutual savings bank is a savings bank that is owned by and operated for the benefit of its depositors.
Credit union. A credit union is a user-owned, not-for-profit, corporative financial institution. The National Credit Union Administration, a federal agency, regulates all these institutions.
Non-deposit financial institutions. Non-deposit financial institutions do not take or hold deposits. They also earn their money selling specific services or policies. Life insurance companies. Life insurance provides financial security for their dependents. Also, they offer financial services such as investments.
Investment companies. People can choose opportunities for long-term growth of their money through investments.
Consumer finance companies, a business that specializes in making loans for long-lasting or durable goods such as cars and refrigerators. Consumer finance companies do not accept saving deposits.
Mortgage companies, they provide loans for buying a home or other real estate.
Check cashing outlets. People use check cashing outlets to cash paychecks and to obtain other financial services.
Pawn shops. Pawn shops make loans based on the value of some tangible objects, such as jewelry and other valuable objects.
Selecting a financial institution. Services offered. There are 4 different types of banking services to use. 1. Savings accounts. 2. Checking and payment accounts. 3. Loans and other credit plans. 4. Other services such as safe deposit boxes and investment advice.
Safety. Federal Deposit Insurance Companies, the federal agency that helps to regulate banks and other financial institutions. The FDIC protects depositors' money in case of the failure of a bank or financial institution that it regulates. Other banks provide money for its operation. The FDIC ensure that all accounts in the same name at each bank up to the amount of $250,000. Another safety feature used in the National Credit Union Administration, NCUA. The NCUA regulates credit unions. It also insures a depositor's funds through its National Credit Union Share Insurance Funds.
Convenience, fees, charges, and restrictions. Online banking is a cheaper, more convenient way to bank for many consumers. Financial services have costs and low fees for using ATMs or having checking accounts, can add up to hundreds of dollars in a short amount of time. If you must keep money on deposit for 2 years to earn higher rate, you are restricted from using those funds for an unplanned purpose. Always balance your needs with the conditions imposed upon you, meaning find the right bank or financial institution for you.